Hold up. The news is saying the bond market is down by over 54%. That sounds scary, but what does it even mean? Don't let the big words confuse you. Let's break this down in a way that makes sense for us, the young investors. What is the bond market? You know how when you buy a stock, you become a part owner of a company? Well, a bond is different. When you buy a bond, you're not an owner, you're a lender. You are giving a loan to a company, or more commonly, to the government. A bond is like an IOU. I owe you. The government or company promises to pay you back the full amount you lent, plus regular interest payments over a set period. The bond market is simply the place where these loans, bonds, are bought and sold. It's an alternative to the stock market, often used by investors who prefer stability and a predictable income stream. The current situation. According to MyJoyOnline, trading activity on Ghana's bond market has dropped by a huge 54% to just GHS 794 million. This is a significant drop, and it's a vital fact that tells us something important. Trading activity. This refers to the volume of bonds being bought and sold. A nosedive in trading activity means fewer people are buying and selling bonds right now. Why is this happening? The main reason for this drop is the ongoing Domestic Debt Exchange Program, DDEP. The government is restructuring its debt to improve the economy, and as part of that, they're asking people who bought old bonds to accept new ones with different terms. This has created a lot of uncertainty. Uncertainty. When there's uncertainty, investors get nervous. They'd rather hold on to their cash than buy into a market where the rules might change. This is why trading activity has fallen so much. People are simply waiting to see what happens next. Conclusion: what it means for you. This news about the bond market isn't a sign that you should panic. It's a key lesson in risk and diversification. Understand the risk. Bonds are generally considered safer than stocks, but they are not risk-free. A government can restructure its debt, and a company can go bankrupt. Diversify your investments. This situation highlights why it's a bad idea to put all your money in just one type of investment. If you had invested only in the bond market, you would be very worried right now. But if you have a mix of stocks, gold, and other assets, you can withstand periods of uncertainty in one sector. The bond market is currently in a state of flux, but it's an important part of our economy. As a young investor, the best thing you can do is to stay informed, understand the risks, and build a portfolio that can weather any storm. What are your thoughts on this? Does this make you more or less likely to invest in bonds? Comment bond in the comment section. Like and share, follow and subscribe for more investment tips from the nerds.